You're more diversified. When I look at the way you set up your portfolio, it's not as niche as that some of these.
I'm big on diversification.
You're very big on diversification.
Like, knowing how to diversify well is more important than almost anything. People don't understand this.
Is that an evergreen principle, you think?
Yes, that's an evergreen principle.
Interesting.
And the reason I'm saying that, the way it is, it's almost like a casino making its money.
Okay.
The way that you do it is you get an edge. So now when you have to make a bet, I've got to bet against the whole world. The world has view on something is reflected in the price. When I think something is attractive or unattractive, that means I have to bet against the whole world and whether that's right or not. That's difficult. I get it right, more often than I get it wrong, but I'm going to get it wrong sometimes. And so when you can take a lot of different bets, what you can do is, like the casino, you'll get your average that your bet would be, but you'll reduce your risk of one of those tables not being the table that's paying off. And so that margin, so I can reduce my risk without reducing my return by knowing how to diversify. And I'd say that's particularly important for the people who are listening, your investors. Because what they've got to
reduce risk without reducing return.
That's right.
That's the specialty.
That's right.
Elaborate a little bit more if you don't mind on that. So reducing risk without reducing the return, because a lot of times if I'm reducing the risk, it means my return's also going lower. But you're saying, no, we're reducing it without even reducing the return.
Right.
I mean, that's a high-paying skill set to have.
It's the most important thing that you could start off doing. If you have a number of equally good likely bets, but they're uncorrelated, like the casino, one table is going to make me a margin like this, but take another table and it makes me a margin like this, but I might have volatility about those. Let me take all those investments that I think will make 10%, so that's my return, but they're uncorrelated with each other. That means I'll still get the 10. I don't lower my 10, but my diversification means I lower my risk. So I improve my return to risk ratio.
Is that an art that you can teach?
Oh, yeah. I wrote about it there's what I call a section in this book, The Holy Grail of Investing. It's 3 pages long. And it explains basically this important thing. Because when that epiphany happened to me and how I would do it, it changed everything by being able to do that. Because
how old were you when you figured that out?
I can improve through diversification. I can improve my return to risk ratio by a factor of 5. So by diversifying, the return relative to the risk, I can keep my returns the same and reduce my risk to 1/5 if I know how to diversify well. And that's why I'm explaining it. It's not all that complicated. It's simply explained in the book. But in any case, that is the holy grail of investing. That's a big thing. If you start to know that that's what you're going for, it changes everything.